The Secrets to Wealth Through Real Estate, a comprehensive guide. Real estate is a time-tested strategy for building wealth, offering both steady cash flow and long-term capital appreciation. Succeeding in real estate requires a combination of smart choices, strategic planning, and an understanding of the potential pitfalls to avoid. In this comprehensive guide, we'll cover everything you need to know about earning continuous income, making cool money, and ensuring wealth generation that never dries up. 1. Understanding the power of real estate investment. Real estate investment is a way to generate long-term wealth and create passive income. Here's how it works. Types of real estate investments. 1. Rental properties, the most common and straightforward real estate investment. This includes buying residential or commercial properties and renting them out for steady cash flow. 2. Flipping properties, buying undervalued properties, renovating them, and selling them at a higher price for a profit. While potentially more lucrative, flipping carries higher risks and requires more effort. 3. Real estate investment trusts, REITs. If you're looking for a more hands-off approach, investing in REITs lets you profit from real estate without owning physical properties. You invest in companies that own and manage real estate, and in return, you receive a portion of the rental income and capital gains. 4. Vacation rentals. Platforms like Airbnb and Vrbo have made it easier to profit from short-term rentals. This model can provide high rental yields in desirable locations. 5. Commercial real estate. This includes office buildings, retail spaces, and warehouses. These types of properties can bring in large cash flows but require significant capital and expertise. By choosing the right type of investment, you can start building wealth that generates consistent, passive income while your properties increase in value over time. Number 2, leverage the power of debt for bigger gains. One of the key advantages of real estate over other investment strategies is the ability to leverage debt. This means using borrowed money, typically a mortgage, to control properties worth more than your own capital. How leverage works. Example, you buy a $300,000 property with a $100,000 down payment and a $200,000 mortgage. As the property appreciates, you gain from the increase in value, but you only had to invest $100,000. Renting out. The tenant's rent payments cover the mortgage, and the property continues to appreciate in value. Important tip, while leverage amplifies returns, it also increases risks. Always ensure you can cover mortgage payments even if the property is vacant or market conditions fluctuate. 3. Maximizing cash flow from rental properties. Rental income is the most reliable way to generate continuous money from real estate. Here's how you can maximize cash flow. How to maximize rental income. 1. Location is key. Invest in high-demand areas. Properties near good schools, public transport, and job centers will have higher rental yields. 2. Property upgrades. Simple upgrades, such as modernizing kitchens, adding energy-efficient features, or enhancing curb appeal, can increase your rental income. 3. Screen tenants carefully. A bad tenant can cause havoc on your cash flow. Screen tenants thoroughly for creditworthiness, employment history, and references. 4. Rent higher by adding amenities. Consider adding value by including high-demand amenities such as high-speed internet, private parking, or in-unit laundry. The goal: ensure your rent income exceeds expenses, mortgage, taxes, repairs, etc., to generate consistent cash flow that grows over time. 4. Pitfalls to avoid in real estate investing. While real estate offers massive wealth-building opportunities, there are also pitfalls you should be aware of. Avoid these common mistakes to ensure long-term success. Common pitfalls to avoid. 1. Over-leveraging. Borrowing too much can put you at risk if rental income doesn't cover expenses or if property values decline. Always ensure your debt levels are manageable and that you have a buffer for unexpected costs. 2. Ignoring market research. The real estate market can be volatile, and what works in one area may not work in another. Always conduct thorough market research to understand the local trends, rental demand, and property values. 3. Underestimating expenses. It's easy to get caught up in the property price, but there are hidden costs that can eat into your profits: maintenance, property management fees, taxes, vacancies, and repairs. Always budget conservatively. 4. Not having an exit strategy. Real estate investments are often illiquid, meaning it's hard to sell quickly. Plan your exit strategy in advance. Will you sell, refinance, or pass it down as part of your legacy? 5. Failure to screen tenants. A bad tenant can cause more headaches than it's worth. Always take the time to thoroughly screen your tenants to avoid future problems. Number 5. Building a strong portfolio for ongoing wealth generation. To build wealth in real estate, scaling your portfolio is essential. Start by diversifying your properties across different asset types and locations. Tips to scale your portfolio. 1. Start small, then scale. Start with 1 or 2 property, focus on managing them well. Once you understand the ins and outs of real estate, scale by acquiring more properties. 2. Reinvest profits. Instead of cashing out profits, reinvest them into new properties or upgrades to increase your returns. 3. Use the 1031 exchange. A 1031 exchange allows you to defer capital gains taxes by reinvesting the proceeds from a property sale into another like-kind property. This can help you grow your portfolio faster without losing money to taxes. 4. Leverage debt smartly. As your portfolio grows, you can use the equity in your existing properties to fund the purchase of new ones. 6. How to make cool money through flipping and renovating. Flipping properties offers the potential for a quick profit, though it's more hands-on and riskier than rental income. Here's how you can turn a distressed property into a money-making machine. Steps to flipping properties. 1. Find the right property. Look for properties below market value that require cosmetic repairs, such as fresh paint, new flooring, etc. Distressed properties in up-and-coming areas are often the best candidates. Number 2. Understand the costs. Know how much money you will need for renovations, including labor and materials. Factor in hidden costs, such as unexpected repairs and delays. 3. Add value. Focus on high-impact renovations like kitchens and bathrooms, which can significantly increase the home's value. 4. Sell smart. Once the property is renovated, list it for a higher price than your total investment to ensure a good return. Pro tip: flipping is best suited for those who can take on more active work and have knowledge of renovation costs and timelines. It can offer significant profits, but requires careful planning and execution. 7. Continuous money generation through vacation rentals. In today's digital age, vacation rentals offer an incredible opportunity to generate substantial income. Airbnb and other short-term rental platforms have revolutionized how investors can earn money. Why vacation rentals work? 1. Higher rental yields. Vacation rentals typically generate higher income than traditional long-term rentals. You can charge premium nightly rates for peak seasons. 2. Flexibility. You can rent the property out during busy periods, e.g. holidays, summer, and block dates when you need the property yourself. How to maximize income from vacation rentals. Optimize listings. High-quality photos and detailed descriptions can help you stand out on platforms like Airbnb. Strategic pricing. Use dynamic pricing tools to adjust rental rates based on demand. Provide exceptional service. Creating a memorable guest experience will lead to positive reviews and repeat bookings, ensuring continuous rental income. 8. Building a legacy, the key to never-ending wealth. The ultimate goal of real estate investing is to create a legacy of wealth that spans generations. By making wise investments, leveraging debt, and passing properties down through your family, you can ensure your wealth continues to grow. Steps to build a legacy. 1. Estate planning. Create a will or trust to ensure your properties are passed down smoothly to your heirs. 2. Teach financial literacy. Educate your children or loved ones about managing real estate so they can continue growing the wealth you've built. 3. Diversify and automate. Use a combination of rental income, business ownership, and passive investments to ensure that the wealth-generating process remains automatic and scalable. Conclusion: wealth creation through real estate. Real estate is one of the most reliable ways to generate continuous wealth. By understanding how to leverage debt, maximize cash flow, and avoid common pitfalls, you can build a profitable real estate portfolio that grows over time. Whether you're focused on passive rental income, flipping properties for quick profits, or generating high returns from vacation rentals, real estate offers a pathway to financial freedom. Call to action. Ready to start your real estate journey? Like, share, and comment below with your thoughts or questions on real estate investing. Don't forget to subscribe WealthRise for more tips on how to build lifelong wealth through real estate.